real estate stocks have been, I won't say they've been on a tear, but they've been on some kind of an uptrend. And is the real estate uptick is here to stay? Is it only luxury which is doing well, or now mid-market and low-cost housing also should make a comeback? Let's take the conversation forward with Gulam Zia, Senior Executive Director with Knight Frank, and Bimal Sharma, Executive Director and Head of Retail Advisory Transaction Services with CBRE. Gentlemen, good morning to both of you and thank you for joining us. Bimal, what is the trend in the real estate market? There is the luxury or the ultra luxury market where every day there is a newspaper headline or a media headline or a DT Now we are reporting that a billionaire has bought a new mansion worth couple of $100. Now that's great headline, but that is not India. What is the real India trend?
I think the overall market is moving forward and the sales are happening on all parameters and every segment is working well. It is on an upward trajectory. New launches are remaining steady and it is across the categories, mid-segment, premium segment, all of them are moving forward, affordable in tune with the same. So I would say the market is still in the positive territory at this stage. And we are seeing more and more launches out of the larger players at this point in time. The bigger developers.
Gulam, why is that we are not feeling, why is that this year, if I look at the trends, the price trend across India are so different? You know, unlike previous real estate cycles where everything goes up together like a rising tide, the price hike in Hyderabad versus price hike in Mumbai and the price hike in Mumbai versus price hike in the NCR region, there is a large disparity. Why is that?
Well, I would not just stop at that. The price rise, say, within NCR, say, Delhi, or within Mumbai would also vary from pockets to pockets. So gone are the days when you used to, see a price rise all across, very, very democratic, all through the real estate market of the country. It is not so anymore. So good developers, good products are in demand, and that's where the price rises would be very visible. And at the same time, there would be, below par kind of products and not very well-known kind of a developer in the same market. Like even in Hyderabad, I can talk about a few such locations or developers where they're not able to take the prices up at all in last 2 to 3 years. In fact, some of the inventory, which is lying unsold for a long time, age of the inventory as a concept also has to be taken into consideration. Apartments which have been sold for last 2-3 years, for example, are not finding any takers. So there, the discountings are also coming in. So overall, the price rise of about 6 to 7% that we see all over, when I take the weighted average, is a reality. The best of the products would perhaps be getting, say, 10 to 12% of a rise every year on year. The top-notch developers that you also talk on your shows and a few of their products also are getting a good premiums. But at the same time, in the same location, you will find some other developers who are finding it difficult to sell and willing to give discounts. So it is not a very, very democratic trend at all. It's product by product and developer by developer that the price rises are experienced these days.
Gulam, I wanted to get in your view as well, Gulam, and what the outlook is in terms of the kind of demand trends that we've seen in particular for residential seem to be at record highs this year. Do you think the momentum can be sustained and even rent prices really going through the roof? What's the outlook?
Well, first of all, let me take the second part of your question, which is rent to sale comparison. Wherever the rents are going high, the sales will not go as high. Because why are you renting? Because you don't want to buy today. So the demand for rent shooting up is one thing that is emerging wherever the rental rates are going high. But on the other side, your question, how do I see the market spanning out here? Well, let me tell you, last year or so, and especially last 7 to 8 months, when the interest rate hikes were coming in on home loans, there were a lot of these, the school of thought was very, very strong that the real estate market had its best and now it will fall. But last month on month, I would say in spite of the home loan interest rate hikes touching almost closing in on double digits, we haven't seen any let up or the demand going down or the transaction numbers going down. In fact, even current financial year, current calendar year, Jan, Feb, March numbers are far better. And at least in March, we have seen the best March in last 10 years. So it is continuing. And now that the rate hikes have also started plateauing, last one we didn't really see any rate hike, is giving some comfort to the supply side, to the developers, that perhaps the worst is behind us. We're not expecting any more rate hikes, etc., or not as deep as what we have seen in last 7 to 8 months. So going forward, if what we have seen in last 7-8 months has to continue, then the good days of real estate are here. And next couple of quarters, we shall see the transactions going as strong as we have seen in last 2 to 3 quarters.
Okay, taking the same question to you then, Bimal, in terms of the fact that we've seen even the average residential property prices, there's been a meaningful rise, and that's across the major micro markets. How are you seeing pricing really pan out for the rest of the year? And is it very specific to select markets that we're seeing this major jump in prices?
Actually, I would second what Gulam said. It is very product specific and for specific developers. Now, and micro markets, as I would put it. Every market is different and behaving differently. And depending on the product and the developer, the quality, the pedigree, the sales are moving. And likewise, the prices are moving up. The current sustenance of the demand shows that we will have continued improvement in the pricing as well, that the market will see.
Gulam, the other thing I wanted to get your take in on was what's happening with commercial real estate. You know, we've been talking about as to how the residential demand has been, but what's happening with commercial real estate? Because, you know, we've seen that there's definitely a shakeout when it comes to the entire gig economy, these new age tech startups, which clearly impacts, you know, all of Gurugram and a lot of Bombay as well. And then how are lease rentals panning out there?
Well, office market has seen the worst days post-COVID, but last year was good, and even this calendar year, the first quarter, we have seen fairly decent requirement and actually absorptions. In fact, you're talking about rental. Let me also say that in last quarter, we have seen rents also inching up. On one side, whether it is the global recessions, at least in the Americas and Europe that you're talking about, or the war, the Russia Ukraine war, a lot of these headwinds, and in fact even the bank failures, there have been a lot of discussions that India will be at the end of whatever office things that we've seen last 2-3 quarters were pretty good. But there's also yet another school of thought which wants us to believe that with so much of choppy seas in Americas and Europe, India will get the benefit of outsourcing, which is also perhaps possible as we go forward. So at least last 2 to 3 months, we haven't really seen any demand going down. In fact, absorptions are improving even in Mumbai and Delhi. Last quarter was pretty good. So net, in spite of whatever is happening, whether it is the banking meltdowns or the startups not really doing too well and so on, in spite of that, at least office markets are inching a bit higher every month on month, and which is heartening because the way things were moving, we first thought during the meltdown of the banking sectors, etc., that impact will be seen. But somewhere people want us to believe that impact of all these things on India will be minimal. India is, I was just reading some stats somewhere, the likelihood of India going through a recession is almost zero. So this is where it is. We have created an economy which is fairly insulated from the global jerks. And hence, we want to believe that going forward, office market shall continue at least to remain stable, if not show best results as it has seen about last year and a half back.
Up with one simple question: what's happening in the NCR region? I look at the numbers from DLF. They were able to sell a new project which was of about 9,000 crore in 2 weeks. When I speak to some other builders there, Max Ventures, Oberoi, quite excited about what's happening in the NCR region. Is there something very unique in the NCR region which is differentiating itself, Bimal?
In fact, NCR has been always a very strong investor market, and that continues to play the game there. Over the years, with the COVID, things like that, people have actually come back into the market in the last year and a half. Today, we are seeing phenomenal sales coming out of that market, and DLF, as you rightly said, did an amazing So it comes back to the product. You put a good product in the market, there are more than enough investors and takers, and they will queue up to buy your stuff in the next 2 weeks, or which is unheard of to sell worth $1 billion in a couple of weeks. But it is possible, as we have seen already.
Okay, and just going to wrap it up then on that front. Thank you so much, gentlemen, for just giving us a deeper insight as to how the real estate trends are shaping up, what the outlook is when it comes to pricing as well as geographical outlook. All right.